What if I told you the party's over? And I don't mean for a weekend. I mean for the next 30 years. A bombshell warning just got dropped, not from some blogger, but from inside the Federal Reserve itself. It's a detailed autopsy of the stock market's golden age, and frankly, it's a chilling forecast for what comes next. Look, forget the talking heads you see on TV. The guy who wrote this, Michael Smolyansky, works for the Federal Reserve Board. You know, the institution that literally controls the money printer. When someone on the inside says, hey, you might want to pay attention, you drop everything and you listen. For 3 straight decades, the stock market felt like a cheat code for getting rich. It just went up. It seemed inevitable. But this paper asks a really terrifying question. What if that entire run, that whole generation of wealth, wasn't skill? What if it was all just one giant, unrepeatable lucky streak? Now, this warning is buried deep inside a 50-page Fed document that's pretty much designed to be unreadable, but I went ahead and chugged a pot of coffee and decoded it for you, because its conclusion about the next 30 years is, and I am not exaggerating here, absolutely brutal. Look, if you want to understand the secret game that's being played with your money and stay ahead of these huge shifts, you need to be here. So do yourself a favor and hit that subscribe button. It is totally free, and it might just be the best investment you make all year. Ready to see what's behind the curtain? All right, let's get into it. So the paper itself is called End of an Era, which, already sounds like a movie trailer. And it kicks off by uncovering this massive mystery, this kind of glitch in the matrix of the stock market that almost nobody was talking about. Just look at this gap. It's the whole mystery right here. On one hand, you've got how much money companies made from their actual business, selling stuff. That grew at about 2.2% a year. But on the other hand, the profits they reported to Wall Street grew at 3.8%. That's almost double. So if they weren't selling that much more, where in the world did all this extra money come from? It felt like magic, but the paper reveals it was just a really clever trick. For 30 years, the market wasn't just growing, okay? It was strapped to a rocket ship, and that rocket had 2 massive engines. But these engines weren't innovation or some genius CEOs. Oh no, it was something else entirely. Engine number 1, cheap debt. Seriously, imagine if your mortgage rate just fell year after year after year. That's exactly what happened for corporations. Their cost to borrow money absolutely collapsed. This was like free fuel for buying back stock, expanding their business, and just juicing their numbers. It was a constant cash infusion, courtesy of falling interest rates. And engine number 2? The tax man simply started taking a much smaller piece of the pie. Corporate tax rates were effectively cut in half. That is more money dropping straight to the bottom line without selling a single extra product. It's as simple as that. And this slide right here, this is the smoking gun. This shows how much of a company's earnings went to just paying interest and taxes. And look at that. It was cut in half. That massive difference is the magic money that fueled the 30-year party, flowing directly into profits and, you guessed it, shareholder pockets. So those were the 2 engines. It was an amazing ride, right? But here's the problem with any party that's fueled by magic money. Eventually, the fuel runs out. And according to this paper, the tank is now officially empty. And here, the author just says it outright. All those amazing stock market returns, it wasn't because investors were geniuses. It was just luck, a 30-year lucky streak. And that luck has run out. Why? Well, you can't cut interest rates that are already near zero, and you can't cut taxes in half twice. The fuel is gone. And here is the painful new reality. Without that rocket fuel, stock returns can't magically outpace the actual economy anymore. So what does that mean? Well, we're talking about growth of around 2% a year after inflation. That is a massive, massive slowdown from what we've all gotten used to. So the case is closed, right? One of the Fed's own researchers proves the party is over. But this is where the story gets really weird, because the Federal Reserve today seems to be pretending they never even read this report. So the fuel is gone. The forecast is grim. Case closed, right? Wrong. The Fed is literally getting ready to do the one thing its own research says can't work anymore. They're about to cut interest rates. And this isn't some secret. Right now, Wall Street is almost 90% certain the Fed is going to cut rates.
This sets up an epic showdown. You've got the Fed's own research saying the magic is gone, but the Fed itself is trying to perform the trick one last time.
So, what does this all mean for your money? We are standing at a fork in the road, and this standoff between the long-term reality and the short-term hope creates two very different futures for the market.
Path A is the long slog that the paper warns us about, a slow, grinding future with low returns. But Path B is the bumpy ride that the Fed might be creating. You might get a short-term sugar rush from rate cuts, but that path comes with some really serious hidden dangers. And here's why Path B is so tempting. History shows that when the Fed starts cutting rates, the market tends to go on a tear. We're talking an average gain of over 14% in the next year. Sounds pretty great, doesn't it? But, and this is a giant but, that 14% comes with a ton of volatility. The ride is a roller coaster, not a smooth ascent. Because when the Fed cuts rates, it's usually because they're scared of something bad happening, and the market knows it. And that's the dilemma. The Fed's own research proves the golden age is over. The long-term path is a slow grind, but the Fed itself is trying to create one last volatile party. So the question we're all left with is, with the 30-year tailwind of pure luck now gone, what happens next?